Dalia Barsum, thanks for joining me. Streetwise Mortgage, welcome.
Thank you, Patrick.
Hey, we've got a bunch of things to talk about, not the least of which is understanding that in this market, there's still remains opportunities for investors. But you shared with 6 things that that investors need to know about what some lenders are doing or what a specific lender is doing. But it really says that there's opportunities for investors and lenders because these lenders have also done a little pivot. Why don't we start walking through that a little bit?
Yes, absolutely. So we as a brokerage are always developing relationships and keeping an eye on solutions for investors, new lenders that are coming into the brokerage world. And I have some great news to share with the community with respect to HSBC. HSBC is one of Canada's largest banks, and they're now a player in the mortgage broker channel. As you know, not all banks work with mortgage brokers, but HSBC has chosen to do so, and they're available to some select brokers. And they're actually a great investor-friendly lender. So I wanted to share with the community today why, and also talk about some offers that they can benefit from to help improve cash flow and save on interest.
So let's walk through that because, it's interesting that, again, HSBC has, been around for many, many years. Are you finding, given market conditions, that they've, put some things on the table that is actually truly a pivot for them in order to accommodate investors? Is that a market they're trying to attract? Because they're doing, they become investor friendly, I think is the term that is used. What is behind what HSBC is doing?
So they're not specifically targeting investor business, but they do have several programs, one of which is investor friendly. But they have been one of the banks that offered low rates and continue to offer low rates on both primary residences and rental properties. So today is what I'm going to cover is their investor program.
Okay, so let's walk through that because you've got kind of 6 points that you want to make around this. I heard low interest rates. I think that'll grab some people's attention.
Yes, so basically their first advantage is the fact that they do rental properties, Patrick, and holding companies. Mm-hmm. And they also offer secured line of credits on rental properties. That's not something every lender does. So that's a plus for investors. Number 2, they are okay with investors who have larger portfolios. So if you're an investor with a large portfolio up to 12 properties, they would work with you if you qualify, and they would do up to 5 mortgages. Some lenders cap even a portfolio that they would consider. They wouldn't look at a portfolio above 5 properties. Right. HSBC is saying, okay, larger portfolio, no problem, up to 12 properties, as long as we, HSBC, finance up to 5 for you. So that's a plus. The third point is how they use rental income. And for me, utilizing the maximum rental income for an investor is important because now qualification is tougher and we're looking for opportunities to squeeze more out of rents, to squeeze more out of income, to find ways to jump over that new qualification bar, right? So with HSBC, they use 80% of the rental income, where some lenders on the street use 50%. So that gives a boost to the income on the application.
That's a huge move. That's a huge move. And, investors, if you've got a property that is cash flowing well, I mean, to add that to the math really can make a difference. And 80% is significant.
Yes. I like that additional percentage that they use. Here is a big one, number 4. This is a big one, and not too many investors know about this. But at some point in the past several years, some banks changed the rules in terms of how they look at secured lines of credit. So let's say you're an investor who have a secured line of credit on a property. You've got $300,000 secured line that you've set up because you want to be able to jump on opportunities or to renovate or to use it in some capacity down the road. Some banks would say, yeah, you got $300,000 secured line of credit. You have not used a penny. We don't care. We're going to still use the $300,000 in our calculations as if you've utilized it all. So they account for a big payment on that line, and that basically makes the numbers, it stresses the numbers. But what HSBC does is they say, okay, you've got a $300,000 line of credit. You only used $100,000. It's with another financial institution. We're just going to factor the payment on the $100,000. We're not going to take the payment on the $300,000. So that actually, again, helps the numbers. And this is why, for me, this is a plus.
Now, so when we look at the qualification process of it all, so, I'm assuming that there's still, investors still have to qualify, go through the stress test side of the equation.
Of course.
Yeah.
Of course. Yes.
But HSBC is being open and looking closely at saying, we don't want to pass on all these deals. We want to take them on. You, Streetwise, is got a relationship with HSBC. Does that also mean, let's let, viewer know that you have a relationship with HSBC, which means that because you do what you do, you have these long-term relationships, that HSBC also has a very good listening for Streetwise mortgages. Is that a fair statement? They're brokers?
Absolutely. I always tell clients we're like Walmart. Walmart has leverage with its suppliers for a reason, because Walmart gives a lot of business and volume to the suppliers. So for us, we are one of Canada's top brokers, meaning we give the lenders behind the scene a lot of business, and therefore we've got service, we've got negotiation, we've got leverage. So it's a great relationship that we have with HSBC as well. And we're able to get exceptions, we're able to negotiate better terms and things like that.
One of the things that we touch on all the time and really hit, an investor-focused broker is so necessary, to actually create relationships with banks and then connect the investor with the lender. Now, HSBC, they're offering some specific cashback deals that I see that you have some notes here. And what about the variable rate static payment? What should investors know about that? Because, lots of concerns these days around the variable rates. What has HSBC worked out in the background?
Yeah, so on the rate front, there are two things. One, the rates are excellent because they offer low rates. That's something they're known for on both primary residence and rental properties. Second, their variable rate product is a product where the monthly payment stays static, and as the prime rate increases, more of that payment goes towards interest and less towards principal until the client hits something called the trigger rate. On the street, there are two types of variable rate products. There is this type of product where the payment stays constant, and then there is a product that every time the Bank of Canada changes the rate, the payment goes up. It's called an adjustable rate. Each product has its pros and cons, but the one with HSBC has this fixed payment, which does give investors a peace of mind when it comes to rising rates, because they're not getting impacted every time the payment changes as the prime changes. So that's a good product for some investors.
Well, that's great. Now, at the end of this month, February 24th, 25th, we've got our R4 conference coming up. You're going to be there speaking to a number of topics. Can you give us some insights into your topic specifically, what you're going to be talking about at R4?
I have not yet decided. There are so many topics investors are approaching me with right now, but I can promise you that I'm going to be talking about something that is in demand, that is pressing, that they need solutions for. So I am in the process of finalizing what that would be, but it's going to be very relevant to 2023 and where investors are and the challenges they're having and where they're heading. So
yeah, what I love about Dalia, what I love about you and you're presenting, number one, you're off the charts in terms of your the way you present and your speaking ability, but more importantly, it's relevant to date. I know JG and I are often, when we're presenting, it's like the night before, we're going, we need to add this because things are changing. There's some good news, sometimes bad news that has to be shared with investors, and investors need to be kept up to speed. So Dalia, I appreciate the insights that you share and what you bring to the table. I think this particular opportunity for investors is to investigate what Streetwise Mortgages has to offer and the relationship with HSBC. I want to say thank you for your time.
My pleasure, Patrick. Before we go, I want to add one thing that investors need to be aware of that is a little time sensitive. HSBC is offering up to $5,000 cash back for clients who are looking to switch mortgages from other financial institutions to HSBC. As long as their application is in the system by February 24th, they can utilize this cash back, which can help with switching costs.
Okay, we got some urgency on there. So we're going to add that to this, make a decision, get moving forward, get a hold of Streetwise Mortgages. Dalia Barsoon, thank you so much for your time.
My pleasure. Thanks for having me.